The talk in the market is that consumption is slowing down. If not slowing down completely, then there is some bit of demand moderation, and that customers have also started down trading. There are hints of this at least visible amongst conversations that we have with companies. So we thought it's best to speak to one of the largest food brands in the country to try and get a sense of not just what they are seeing in their business, but of what they are seeing across the consumption spectrum. Joining us now is that very gentleman, Mr. RS Sodhi, the MD of Amul. Mr. Sodhi, so good having you. Thanks much for joining in. Now, when we see reports from brokerages who talk about what their channel checks are suggesting, almost unequivocally, everybody is saying that demand is starting to moderate across product categories. Now, you would be the final word on dairy, but I would want you to start off with what your thought is about demand and possible demand moderation across the staple space.
No, I don't think demand is reducing, but what can we say is in some categories there may have been a reduction in the growth rate. What we used to get in earlier 3-4 years may have reduced, but it may not be true for packed branded food products. You see, food market in India is around $300 billion, and dairy it is $100 billion. Packed branded is only in dairy is $100 billion and another $100 billion in other food products. So what is happening is demand, what we have found is now coming for branded food product is more from the rural and tier 2 and 3 or smaller cities also, or I say bigger villages also. And what is happening is we find tremendous increase in demand for the small packs, 5 rupee pack, 10 rupee pack or 20 rupees pack. We have seen now people are consuming or buying less of bigger packs and buying more of smaller packs. And earlier we used to give a very good bargain to the people for going for a bigger pack. But now I found that brands have started giving bargain for the small packs also. So naturally, consumers find it better to buy a smaller packs, and every time you can buy a fresh product instead of keeping in the house on shelf for 1 month or 2 months. So as such, in dairy, if you ask me, in all fresh product, whether it's a milk or buttermilk or dahi or paneer, the volume growth is double digit, year-to-year basis. And out of a double digit growth, half of it is coming because of increase in consumption. Because if prosperity, income levels are increasing, people are spending more and more on the food. And half of the growth is coming, people shifting from loose or unpacked or unbranded to the packed and branded form. So for food in packed and branded, demand is growing, but more diverted towards smaller packs.
Interesting. Mr. Sodhi, why would companies be undertaking such a strategy? I would presume that more packaging, because by virtue of smaller packs, would mean higher costs. And I'm guessing it's not an innovative strategy because it takes probably a month for competition to catch up when somebody would launch an innovative packaging or a marketing scheme. So why would companies be doing this in the first place?
See, if you don't do it, somebody else will do it because there is a gap. If suppose I'm selling a dairy whitener in 200 gram or 500 gram packs, and which is costing around, for 200 gram is costing around 65 rupees. And if some, in the smaller markets, if I'm selling X packs, if people want smaller packs, somebody will launch 5 rupees or 10 rupees pack, and people who cannot afford 65, they'll start buying that pack. So if I don't do it, somebody else is going to do it. And I have found in 5 rupees and 10 pack, we expand our capacities, and always demand is ahead of the capacities what we expand. And nobody wants to give that market to somebody else. And in ice creams also we have found 5 rupees, 10 rupee pack, because now no longer branded packs or even the premium products like cheese or like ghee are only for metro, cities only or urban consumer. Rural consumer also want to buy the same product but in the small pack size. And in urban areas also we have found people have started buying more frequently but smaller packs.
Interesting.
And food, because you get fresh product every time you buy.
Sure. Okay, so this food market, and you spoke at length about how the rural market is starting to pick up. May I ask you that in your 13% growth that you witnessed in the year gone by, has the proportion of rural growth, the additional revenue coming in through the rural market upticks, been substantially higher than the past and higher than what you had envisaged? And if that is indeed the case, would you believe that's a trend that is developing now?
No, please try to, when I say rural, does not mean the rural per se. Rural means lower end of the market. It is present in rural India also. In the bigger cities also, smaller slums area or the lower income group markets. So that is the market is growing. Especially some states, I give you example, like some state like Bihar, Jharkhand, Northeast, these states are giving us much more growth than the metro cities.
Okay.
So now these are Delhi, Bombay, Calcutta, these are the mature markets. Competition is also more. But I have found in branded food products, tier 2, tier 3 markets or the states are giving much more growth than the already developed or the mature markets or the cities.
Very interesting. There were some murmurs of down trading in certain pockets, Mr. Sodhi. You know, brokerages who have come to us have said that when they speak to companies, they are talking about some moderation in demand, not all. You yourself said that demand is not moderated, just that people are opting for lower price packets. But, you know, across industries, plywood, certain staple companies, select auto companies are all saying that, at least to those brokerages, that there is some bit of down trading that the Indian consumer has started to do, which is the first time that they believe they have seen this in a really long time. Have you experienced that? Have you heard of that? And would you think that this is just a passing phase, or could this be the new normal?
Well, you see, people who are charging some premium for any product category without delivering the value, their consumer is realizing that I'm not getting the value equal to the money I'm spending. And with the choices increasing, people are going more for more value for money or economical products. So one fellow will call it down trading. Other fellow is saying that I'm buying what I'm spending. So what I found that consumer is becoming more smarter and wise when making the choices. They will not give you the premium just if you have got a fancy packing, or they'll give you 30-40% more for the same product just because you have got a big brand. So now if you want to take any money or 10 rupee out of a pocket of a consumer, you have to deliver that value, because now consumer has got more choices. And here I'll also like to do down trading. See, earlier I'm talking about more food, which may be applicable to a lot of other FMCG products. Earlier consumers were giving premium or expecting that national brands are good. They were ready to give 10%, 20%, 30% premium. Then came in food regional brands. So consumers started buying more of regional brands because they found it is good. But now I found there are city brands. Now consumer is giving more preference for the city brand or the mahalla brands or the regional brand than the national brand. And these brands, which are regional brands, are naturally more economical and giving more delivery. So those national brands feel the consumer is downtrading when they are switching over from national brand to the regional brand, but which is not true. Consumer has become more smarter and wise.
Has there been an increase in promotional intensity for the same basket of goods, Mr. Sodhi, in the food space? And if you can throw some light on how the last quarter or the last 6 months, how pricing and costs has been, maybe from an Amul perspective, maybe from an industry perspective.
See, one thing is, it is now becoming day by day very difficult to build national brand or to maintain national brand. in food. Because firstly, with this your media, which is becoming day by day very confusing, you don't know where to spend. You want to increase on TV, people are shifting to the Netflix or Prime Video, etc. The youngsters, and people are on social media more than on the press, etc. And for national brand, it has become extremely difficult. So I don't think now for any even national company, anybody can build national brand in 1 or 2 years like they used to be earlier. By just spend 40, 50, 100 crore rupees on the TV, you can make a national brand. That has become very difficult. And also the distribution cost is becoming too much. And coming to the second part, you said is last quarter or two thing. What you said is,
yeah.
What was the question?
How is the pricing sitting and how have costs been?
Yeah. One in food or in other practically there is no increase in the pricing or the MRP or the price to the consumer last 1.5 to 2 years. I'm talking about food and energy because the input costs had not increased, whereas competition has increased. So practically there's no way to increase the prices. And cost of production also more or less there. Whatever impact of GST had come in most of the FMCG product or food products, prices had reduced, except in case of dairy, if you talk ghee price increase, but most of the other products prices have reduced. But now, after this 2 years lull in the market, no price increase, now gradually cost of production of food products is increasing, and you will see next 2 years food products prices will keep on increasing day by day.
Okay, well, that's not music to the ears. We want lower food inflation, maybe not as low as it's right now, but lower food inflation nevertheless.
So it will be it will not be more than the inflation, but
okay.
Last year price was below inflation.
Would it be safe to say that you believe that a volume growth of 10 to 14%, whatever the number may be, 2/3 of 20 essentially, but 10 to 14% could be achieved by Amul, yes, over the next 5 years, but the industry too could have reasonably sized growth, because I don't think a company can really outpace the industry by a wide margin. So if you grow at 14, maybe the industry grows at about 10 or thereabout percent. Do you think that's a safe assumption?
What I said is industry will grow at 14% volume. Amul is trying to match the same. If we don't grow, others will grow and we lose the market share. So we have to grow at 14-15% to maintain our market share, because we are the market leader in most of the categories. Consumption is going to grow. So if we don't make our policies, our marketing strategies to match with the growth, somebody else will snatch our market share. So we have to grow.